Good morning and welcome. This is Business Day Television, and we're bringing you today a fresh edition of our weekly program, Business Week. We have a single lineup today, and if we have time, perhaps we would add a second. But before we get into it, and you're going to find that we have good reason for choosing only one item today. Before we get into it, let's provide some sense of what is happening around the world. A U.S. delegation on a fact-finding mission has arrived in Abuja as a follow-up to the threats by the President of the United States to attack Nigeria because of allegations of attacks on Christians. We hear that the federal government has terminated the Recon contract for the construction of the Calabar-Itu Highway, citing delays by the contractor. Now, one very good news. Nigeria says it contributed to foiling the attempted military coup in neighboring Benin Republic. Indeed, I feel proud as a Nigerian that we do not only know what democracy is, that we can be counted to defend democracy. The European Union has launched a 12 million euro initiative to strengthen maritime security around the West African and Central African corridor. Now, that's it for the headlines this morning. Let's get into our conversation today. Joining me as usual is Dr. Adeosun, our Chief Economist at BusinessDay, and of course, Lolade Akinmurele, the editor of BusinessDay. Now, our focus today will be around the medium-term economic framework, which the government announced last week, and which also gave us a sense of what we should expect whenever the budget for 2026, the federal budget for 2026 is announced. Let's start with you, Lolade. Can you just help provide a sense of what the framework lays out for Nigerians?
Okay, great. So for 2026, the projected expenditure is about 54 trillion naira. 12 trillion of that is supposed to go to capital expenditure, and about 32 trillion recurrent expenditure. What is interesting is that debt service is actually the largest line item, 15.9 trillion. So that's huge. But, you know, most of the people that we've spoken to about just what they think about the budget, they say that it's very much realistic, unlike previous budgets where we've had significant revenue overestimations. In this case, I think the revenue projection is 34 trillion naira, which is within something that the country can achieve, especially given that next year would also see the implementation of tax reforms that are supposed to also boost government revenue. If you look at the data, you would also find that non-oil revenue is expected to rake in more cash than oil revenue. I think that's been the trend in the last 2 years now. Nigeria is increasingly diversifying its revenue base and reducing that over-reliance on oil revenue. Another thing that stands out in the budget is the oil price projection, $64.8, which is good. So that's only for the budget, but they expect that it could go as high as $70, but they don't want a situation where the numbers don't add up at the end of the day. So they went with a more conservative estimate of $64 and 1.8 million barrels a day production. I think in 2025 budget, it was 2.1 million barrels per day. So there's a decline there in terms of what we expect to produce, oil that we expect to produce in 2026. So overall, I'll just say that it's a very achievable budget. Some might even argue that it's not as ambitious as you would like, but in terms of the estimates in there, I think it's pretty much feasible. Let me also throw in that the exchange rates projection is 1,512. That's compared to 1,500 in 2005. I think the worry here is that, you know, going into a year that this is 2026 is the year before the elections, they might maybe foresee some sort of inflationary pressure that might end up pushing the exchange rate, and that's why we have that review upwards. So yeah, essentially, I think it's a good budget that looks very much achievable.
Thank you. Dr. Adeosun, it's not for nothing that you have a doctorate in economics. Can you further break this down for us? What does it mean?
So a few things to add to what my colleague have said. I'd like to emphasize the fact that we are going to have a deficit of about 20.1 trillion naira, which is about 3.6% of GDP. So apparently, debt service alone is projected to be 15.3 trillion, which is very, very significant. So just to put it out there, that was for like every 100 naira the federal government expects to earn in 2026, for example, almost half will go into debt servicing. So which means we are paying for our part.
Because revenues are about 30-something trillion, and debt servicing is about 15 trillion. So it's about 50%.
Yeah.
Also importantly, the MTEF, like Lolade has alluded to, is really realistic. Oil price assumptions are cautious, which is good. The deficit to GDP ratio is also lower than in recent years, and I think this is a step in the right direction.
Fantastic. I mean, let's begin to take them one by one. We talked about a total budget outlay of 54 trillion.
54.3.
And Lolade said some people are of the view that it's not even as ambitious enough. And if you slice that, a chunk of it is going to recurrent expenditure and debt servicing.
55%.
And only paltry 12 trillion thereabout is going for capital expenditure. So I get a sense that this might not be enough, but then there is also a need to cut our coat according to our cloth and be more realistic in budgeting. The bit about foreign exchange rate for the budget, I'm not exactly sure what signal it sends. I have been thinking about it since Friday. And I said to myself, maybe the government does not want to take the lead in what is easily the central bank purview by pretending that it knows what the rate will be next year, or does not want to be the one sending a signal about exchange rate. That could be one. The other one could be that the government is creating more room for naira at its disposal by using such an exchange rate to convert the foreign exchange that it will earn. I guess the jury will be out until we see what the central bank will do. We have exchange rate today at about less than 1,500, about 1,450. Some people say that even at that level, the naira is still undervalued. But again, as I said earlier, we would see what happens in the course of the. One thing that I'd like to pose to the two of you, just looking at the size of the budget in naira terms, if you were to convert this in dollars, what does it say in terms of the budget for the federal government of the country, Nigeria, the size that we are? What does it say if we were to convert $54 trillion naira into dollars, and how does that compare with, say, the South African, the Egyptian, the Moroccan budget, for instance? Who wants to go first?
Okay, I think it's still little in dollar terms. It's about $40 billion. That's not, if you look at what the South African budget was for 2025, it was close to 100 billion. So, yes. So the Nigerian government is still punching well below its weight. And that's why people think that it's important that the government really starts to act like its budget and stay out of business and allow the private sector really drive the economy, because the federal government's budget is too small to really make a significant impact on economic growth. But I think that one area where Nigeria still has a lot to do. I mean, I was, for instance, listening to Dr. Olisa Bakuba the other day, and he was talking about how Nigeria should be aiming to have budgets of 500 trillion naira, But the point he was trying to make is
that's a good wish.
Yeah, it is. But the point he was trying to make anyway is that there are a lot of low-hanging fruit in terms of revenue generation that we're not taking advantage of. He talked about real estate, the debt capital that's just trapped in real estate that the government is not really looking at, and that there are so many projects. We have huge infrastructure deficits. Which different estimates will put at about $1 billion per annum for the next 30 years to just bridge that infrastructure deficit. So, and how much are we doing in terms of just, even if the government doesn't have to spend all of the money required to bridge the infrastructure deficit. I mean, PPPs, public-private partnerships, could be explored. But some people feel like the government has to take the lead by just trying to de-risk those infrastructure projects by first putting their money where their mouth is, things like that. So there are quite a lot of low-hanging fruits for the Nigerian government to really exploit, so that we start to have a budget that is really that can actually match the size of our GDP and the size of our population. 200 million people. We should be having a budget that is much bigger than what we are at today. And that's why I made the point earlier that some people feel like even though this budget is very realistic, it's not ambitious enough for a country with the type of needs that we have and the size of population that we have. So for sure, there are many low-hanging fruits. But I think what is important now is I think there's been a transition now. We've gone from a period, the last 8 years leading up to 2023, we had consistent revenue over projections, budget that were not implementable, but we still went ahead to put out the numbers. But now we're transiting to a period where, our budgets are more realistic. I feel like the next phase from here would be to now see, okay, how do we essentially just increase the budget size so that it's able to match with peer countries in Africa, and we're able to boost spending significantly. That would also help drive growth. So that's the next phase, if you ask me.
Dr. Adeosun,
Yeah, so what I'll add to this is that, again, we are not number 1, 2, or 3 in terms of budget size.
Yeah.
When you convert it to dollar, but we are number 1 in population. And there's this belief that human capital is perhaps the most strategic human capital. But beyond the numbers, we need to convert it to production and productivity. So it means that the government and relevant stakeholders, we must rely less on natural resources. Because if you check the likes of South Africa and the likes, they have improved, for example, significantly with respect to power generation, which is a corollary to industrialization, manufacturing, and the like. So we need to put on our thinking caps so that we can show up revenue. Yes, it is good we are trying to increase our tax, but beyond increasing the tax, let's also widen the tax base. How can we support SMEs? How can we support the creative industries? How can we, outside oil, we need to really state up so that we can do more. And then also, let's block leakages. Anything we can do to minimize, mitigate against corruption, we should also look at it. Then, how can we enhance our critical capital spending, for infrastructure? When you open up new roads, new waterways, new train stations, new airports, you open up the community, and then security is also very. For example, we spoke here about 30 December. Why can't we make 30 December not just a Lagos phenomenon, but more of a Nigerian? So maybe from Lagos to Calabar to Uyo to Kano to Kaduna. These are some of the things we need to exploit so that perhaps even if we can't attain 500, maybe we can even aim for 250 or thereabout.
what is clear, and what I hear is, in dollar terms, when you compare Nigeria's federal spending with peers, whether it's South Africa or the others, we don't measure up at all, especially when you look at per capita.
Yeah.
When you split the $54 trillion naira by the number of by the population in Nigeria, and you compare that with say South Africa, then what you find is very, very abysmal. And I also hear that rather than be an enabler, a catalyst, it appears as if most times government is even a hindrance, holding down itself and holding down the people of Nigeria. I hear Dr. Adeosun say, if we do this better, Nigeria would have a bigger budget to spend, and there's certainly more power to impact the people positively. Now, but I wanted to just say that I like the view that with this budget and with the moderated size, we are being honest to ourselves.
Yeah.
For the very first time.
Yeah.
We have adopted an oil production level that is closer to what is pragmatic or possible. we have chosen a Naira exchange level that aligns with where we are today. And, you know, we have also provided well for our debt servicing. Isn't it good that we are honest to ourselves?
Yes, it is. For sure, it is. It's good. And that's why I said, I mean, for many years, we've not had this type of honesty, and that has really just chipped away at investor confidence, because people ask the question, why do you keep drawing up budgets that you know that the government is well aware that is not implementable? But one gray area anyway is that, you know, we haven't seen the 2025 implementation.
I like for us to do that after the break.
Okay.
We will talk about...
yeah, but I think it's good that we're being honest. I think it's good that we're being honest with ourselves. The projections for the first time are not over ambitious. They're not. They're very realistic. If you look at what's going on in the oil market, then you know an oil price projection of $64 in 2026 is not bad.
Which is about where the global market is
currently. If you look at the production as well, 1.8 million barrels. That's what we're currently doing.
And that will include condensate.
Yeah. So it's not bad. The exchange rate as well, 1,005. In fact, some people will feel, like you said earlier, that people have the view that the Naira is undervalued. Some people would even feel like, you should be around 1,002 by 2026. But, you know, they've gone with that very conservative estimate of 1,512. We should have no issues achieving that next year. So it's a very realistic budget, if you ask me, and kudos to the budget office.
Thank you. Dr. Adeosun, one or two comments, and then we would go on break.
So, again, increasingly, at least from an economic perspective, has also been led by the central bank. This increasing returns to orthodoxy. We've seen this the last 2 years, and I'm sure this is one of the reasons why this medium-term framework also follows suit. I think the more honest we are with ourselves, the better for us, so that we will see the gaps and we also roll off our sleeves, and then we do the work.
Mm-hmm.
Okay. If we are honest, but we are still poor, it's good, but we now need to become rich so that we can take care of our citizens.
I agree. And there's one line item in that budget: privatization proceeds. We've been hammering on this for years. It has gone from 312 billion that was budgeted in 2025 to 186 billion.
So the ambition is just going down.
Yeah. So that's another area where, you know, there's definitely a lot could be done. You know, there's an advantage there in terms of just raising that up. If we're really serious about just pulling in more resources, more capital, so that the budget is implementable, because that deficit you spoke about is huge. 15.9 trillion debt service. Yes, I mean, it's legacy debts that we're servicing, but that's huge. That's the single largest expenditure item for us in 2026, just repaying creditors. You know, a country doesn't develop fast enough when you're
with such a heavy
committing almost 50% of the revenue you are expecting, just repaying creditors. Exactly.
All right. We will come back to this matter of the debt as we once we get back from break. But viewers, thank you for joining us. We would go on a short break, but please don't go away. We'll be right back. For today, the 8th of December. Now, before we went on break, we were looking at the Nigeria's medium-term economic framework, the provisions and especially the signals for the 2026 budget. And we left just wondering how a nation can get out of poverty when it is spending 50% of the federally collected revenues on debt servicing. So, gentlemen, the pain is not just that we're spending 50% of revenues on debt servicing. It is the fact that we don't know what they did with the debt, and surely the debt is not contributing to generating revenues to pay back the money.
Yeah.
So the situation,
it's a double whammy.
Yes. On one hand, the debt to GDP ratio looks very low compared to our peers globally. However, on the other hand, which is also very important, the debt service to revenue ratio is very huge. And then now go to the point that what exactly are we doing with the can we see commensurate value?
So we are not against borrowing. We're only saying that we should be efficient and productive with what we borrow for.
Exactly.
We shouldn't borrow for consumption.
Exactly.
As Buhari did, borrowing to pay a petrol subsidy.
Exactly. If you're borrowing to significantly boost power generation, then fantastic. Or to build rail that is actually, bankable, rail that can pay itself. Pay for itself, not just rails to nowhere, but rails that really connect economic centers, that can encourage freight and
But
things
don't,
like that.
but you know what I mean? I mentioned Buhari, but the current president cannot be allowed to escape for blame. I mean, when Jonathan wanted to take away petrol subsidy, he led the protest to stop the removal of petrol subsidy, and today he's taking the victory lap for succeeding in taking out. So the mess we see today is not just about 2025 or 2024. It is an accumulation of wrong decisions made over the years, and how the elite allowed itself to be deceived and is deceiving everybody, pushing for a petrol subsidy and other such scandalous policies. So I think that we all must take our own share of the blame, whether the elite, whether journalists. Most newspapers in Nigeria canvassed the sustenance of petrol subsidy. I think BusinessDay was the only newspaper that stood out in calling a petrol subsidy for what it is: a scandalous spending by an irresponsible government. But let's come back to 2026 budget and the medium time economic framework. We don't have numbers, as Lolade has said, for budget performance for 2025. But the numbers we have is Nigerians are saying we are in trouble still. With all the fat budgets, our lives have not been positively impacted. So what does it matter? Fat budget or small budget? It doesn't matter. People are crying.
It doesn't matter. If you're not implementing the budget. And the part of the budget that really impacts on the people and drives economic growth is mostly the capital expenditure. It's not to say that the current expenditure don't matter. You pay salaries, you give people purchasing power, they go to the market, they buy goods, and that translates into economic growth as well. But the capital proponent of the budget is really what stimulates economic growth. From what we have heard, even though the budget office has not published the implementation report for 2025, we hear that the capital project implementation for 2025 is around 8%. That's abysmally low. That's abysmally low.
Have we ever been that low in Nigeria?
No, at this time of the year.
And is
it's already the final month of the year. Typically, we've struggled to fully implement our capital budget, but it's never been as bad as 8%. And in those previous years where, you had data, the budget implementation reports, for instance, that, just showed you how much.
And how regularly is the budget implementation report released?
Every quarter.
We haven't had any.
We've not had any for more than a year now. The last one was Q3 2024.
Wow.
Typically, it's released every quarter, and it just shows you how
somebody's sleeping on his duties.
Yes, and it's a real big problem.
Or is it a deliberate?
Well, I wouldn't know, but it's really curious because, like I was saying, in the past, whenever we struggle to fully implement the capital budget, it's because we have gone ahead to make revenue projections that are not realistic. And then we don't want to borrow much more. So in order to manage the budget deficit, you end up only being able to implement the recurrent expenditure, which you can't really tinker with. You've got to pay your creditors, you've got to pay staff salaries. But the capital budget is usually the one that takes the hit, and it's not really fully implemented.
That's more catalytical.
Precisely.
But assuming you were paying contractors and you were building roads, for instance, food sellers around the road will be having a good
precisely. But if you look at the revenue projection for the 2025 budget, it's less than 25 trillion naira. So I'm wondering, why should we have a case where capital budget implementation is below 10%? And this is coming off the back of the reforms that we have seen, the petrol subsidy removal, which has led to extra cash for the government, the naira the liberalization of the foreign exchange market, which has led to the weakening of the naira. So it's quite curious. And the only way that we can get the answers to the myriad of questions that we have about what's really happening with the 2025 budget is for the budget office to just go ahead and publish that data.
As a newspaper, are we asking the government the right questions? Are we pushing?
Yeah, of course we are.
Compelling them to...
Yes. We've been doing articles on that for the most part of last week. We did quite a number of articles.
And for all that journalists...
Even Dr. Adeosun did a very provocative piece on Nigeria's missing budget.
Do people understand how poorly government is doing in this regard?
Maybe not enough. Maybe we still have to do more, for sure, to just bring to the fore the recklessness of this government by not...
That should be on the front burner.
Yeah.
Security and insecurity
is
crowding out.
I don't have a problem talking about insecurity, but we can talk about more than one thing at the same time.
Yeah. But I think what he's saying is that insecurity tends to now dominate the headlines for many newspapers. That's what's top of mind for a lot of people, kidnappings here and there. Nobody has time to say what's happening with the 2025 budget. Where's the 2026 budget?
Yeah, but in truth, Lolade, most Nigerian journalists don't even understand this. They wait for the budget to be announced, and then they wait for the government to say whatever it says, and then they wait for the next budget, and then they wait for the next budget, and then they wait for the next budget. Not many people have the understanding that I think BusinessDay should have, that a budget is nothing if it is not implemented.
Yeah.
Execution is king, really.
Yeah. Otherwise, it's just another piece of paper.
Now, we don't have data, so what we can say is that capital expenditure side of the budget has not been properly implemented.
Yeah.
And in fact, what we hear is that implementation is around 5 to 8%, which, as we say, is abysmal. But there should be other things around the budget for which government should account, and for which we have no data.
Just to also quickly chime in here.
Please.
So remember that it was all over the news just this last week. Contractors.
Yes.
I think those are subtle cues. Because these contractors allegedly are contractors who have finished doing the work.
And these are Nigerians who have staffs to pay, who have families to cater for. They have taken loans and they have to pay.
Perhaps maybe that's why we even went on the to borrow to get an extra Eurobond.
Okay, so if we got some money from the Eurobond issuance, the only way it is reflected so far is in the foreign reserves. Yeah. But I'm not sure that was the reason why we did. Of
course not.
So why is it not passing through in naira terms?
Yeah. I wonder why, because if we've got this situation of unpaid contractors, it's a real mess. I imagine that there are quite a number of them that will not even start the work at all if they've not gotten paid. And that's why the capital budget is at a very low level of implementation. But yes, you would expect that part of the process for that Eurobond would go into funding the 2025 budget.
Has this anything to do with the timing of our borrowing? Are we borrowing at the appropriate time? If the Eurobond issuance was for 2025 budget support, shouldn't that have happened in the first quarter?
Yeah, but
how do you borrow at the
end of the year?
Yes, of the year.
But
and expect to make impact.
Yeah. So the thing is, there are quite a number of factors that you have to consider when you're going to meet foreign investors, to borrow cash.
Yeah, we could have issued naira bonds very quickly.
Maybe we could have done that. Yeah, maybe we could have done that. But there's usually a portion that is being the portion of the deficit that's supposed to be funded by domestic borrowing, and there's also a portion that should be funded by external borrowing. So I think so far, if you look at the DMO's calendar, the domestic component has been completed already, and we're still in the last month of the year. But the external came late because I think they were just waiting for the right time in terms of pricing.
Yeah, but would we not have been able to issue naira bond as just to close the gap? And when the Eurobond issuance comes,
that would have been a creative way to. Yeah, that would have been a creative way to deal with it.
It's just the right people paying the right attention.
That's the point. For a government that is on top of its duty, that should be it. I mean, it's like a private company that imports raw material, and then the raw material is not coming it will quickly look for some ways to get that,
contingency plans,
so that its plans are not shut down.
Yeah.
So clearly, we need to get our government, people in government, and they're the ones who we're talking about the recurrent expenditure. They get their salaries anyway.
Yeah. So
whether they work or whether they don't work, they get their
Precisely.
salaries. What a pity. Yeah. Anyway, let's look at how do we avert these crises next year, 2026. Given that 2026 is very important, is the year leading up to the elections. Is a year that will be defined again by fight against insecurity. Is a year that, the Nigerians just they have this almost, their pain, there's no limit to it. But they must hope that next year, just the fact that the government will come seeking votes, next year the government will be diligent in ameliorating their pain and helping them. But how, using the budget tool and implementation, how do you ensure that our outcomes in 2026 are exceedingly better than the outcomes for 2025?
So let me start by saying that I know sometimes you don't like to say this, but I think the National Assembly needs to do better.
Do we have one?
With respect to oversight functions. Again, having 2-3 years budget.
Yeah, the debate is around Natasha and Akpabio. The debate is around whether Akpabio should be there or whether it should be nice to Tinubu.
The main reasons why they are there to hold the executive accountable.
Do they know?
So as we meet there, that's one of the reasons why we will keep shouting and reaching out.
This particular National Assembly has been the worst in history.
There seems to be too extra paying attention to non-issues. Look at the way they handled, for example, the new defense minister. By now, this is the kind of attention we should be giving to the budget, especially execution and so on and so forth. It's critical.
They're not asking the right questions. I mean, like you rightly said, this overlapping budget, I won't be surprised if the 2025 budget is carried on to 2026, because if we're raising Eurobond at the last, There was
a comment that I saw that it took the Congress in the US to hold sitting on insecurity in Nigeria before our own National Assembly.
Discussing about it.
What a shame.
And then they collect their money.
Yeah,
they are part of the recurrent expenditure that is
yes. That's one of the best paid
I'm sure
lawmakers
they are
in the world.
implementing up to 100%.
Yeah, that's one of the best paid lawmakers in the world.
All right, it's good to talk about the National Assembly failing the people, but the executive as well must lead by example. So what should the executive do better next year?
I think for my part, I'll say that, like we said, I mean, it's clear the impact that the capital budget can have on the economy and on the people in terms of just delivering on big projects and all of that. I think there needs to be more attention paid to that. That needs to be implemented diligently, judiciously, just ensuring that we, for the first time, hit at least high 90s.
In budget implementation?
Yeah, capital, especially the capital proponent. But the truth is, I mean, the recurrent is not flexible. You have to meet that anyway. So yes, if you can attain 90% of the capital expenditure, is as good as saying the entire budget has been implemented by that same margin. So it's something that the government should really focus on because this government has been quite unpopular in terms of the type of reforms that it has pushed through, even though we agree that these reforms are important, but the kind of hardship that it has created just makes it quite unpopular with the people. And next year is also going to be the year where we would have the tax reforms implemented. Some people will start paying more taxes. So it's important that people get real value, for the taxes they are paying, and then they also get some sort of succor after such a very difficult 2024 and 2025 in terms of the impact of the reforms for subsidy removal and the naira depreciation. So the capital proponent needs to be fully implemented, if you ask me, for us to have that significant impact on economic growth. Because if you enter a cycle of high economic growth, then it means that you have more private sector investments, you have better job creation, and that goes a long way in terms of just reducing unemployment, reducing poverty, which is sky high these days in Nigeria. The chances that if you have a job, you'll be better able to fight poverty is pretty high. So that needs to be the focus, just ensuring that we implement the major part of the capital expenditure plan and ensure that we give back. The reforms are more or less, if you like, they've taken out of the pockets of Nigerians. Just find ways to ensure that we invest in critical sectors that ensures that we give back to people, we create jobs, and then poverty can then take a decline.
Okay, Chief Economist, as we round up on this matter, can you help us define what will success be like next year for you, considering budget 2026? What will be the definitions of success? How can we say this is it, we have succeeded or we have failed?
I think we need to strengthen our accountability mechanism, for lack of a better expression. For example, can we have a monthly media chat with the Minister of Finance where we can put him on the spot, ask critical questions like this?
Even
say month out.
Yeah, and another way is if we don't do this, the National Assembly should do it.
Exactly.
Because some of the things that are panning out now, they are not new. We will have checkmated in the first quarter, in the second quarter, like the performance of the budget.
Okay, fine. So, number one, accountability should be improved. Number two,
very critical. That accountability seems to be like the biggest missing link in our opinion right now.
We've said earlier that implementing the capital budget as well would count for success.
So the level of capital budget implementation, what for you is success in that regard?
So that's one.
What level? 90%, 80%, whatever?
100%.
100%.
It's too small. I mean, if you look at it, like we said, it's just 12 trillion naira.
Okay.
For a country with our population size, it's small. We should be aiming to achieve 100% and even have perhaps a supplementary capital budget. So that's what I'll say.
Should we get better in borrowing? Better timing?
Yeah.
More project-tied borrowing than this
that's a
probably boss kind of borrowing that Nigeria has been engaged in.
Yes, that's a very good point. I think we should also try to find.
We should demand that government does not borrow unless it says what it's going to do with it.
Yeah.
And that
project-tied borrowing.
It should be project-tied.
Yeah, project-tied borrowing. That's what most countries do.
The media should do it. The National Assembly should do it as well. And just say to government, you know that we have overborrowed already.
Exactly.
Not in terms of GDP, but in terms of revenue ratios.
Yeah.
Okay. So better accountability, better borrowing schedule, a higher 100% execution of capital budget.
Yeah.
Number 4.
How to add, very importantly,
please,
revenue diversification.
Revenue diversification.
Oil exploitation should continue very aggressively. We need to shore up our revenue base because it's lack of revenue that push us to borrowing.
Wow. 4 key things.
I think I'd like to add one more.
Please.
I think if we're able to also achieve the very conservative target we've set for privatization proceeds, that's also another way of diversifying revenue. And that would also provide room for us to cut back on borrowing, because for instance, what is in the budget is about 880 billion
in terms of proceeds. What do you expect?
Yes.
But they have not told us yet what
exactly they haven't told us. So we need more transparency in that area. But if they are able to achieve that and even surpass it, then it means that they might have to borrow. They might not need to borrow as precisely.
Okay. So what am I hearing? We have examined the medium-term economic framework for Nigeria that was announced by the federal government last week. We've looked at the numbers it contained for budget 2026. But we have also said that there is a significant displeasure over the lack of transparency of the implementation of 2025 budget. And the last time we got a budget implementation report was in third quarter of 2024. That's truly unfair. But the year is running out and we must move ahead. And so we have focused at the end on just looking at what success will mean for 2026. We said, for instance, there has to be more transparency, which means that more transparency and accountability. Government should accept that it has to be accountable to the people. There should be a monthly numbers provided for budget implementation, where the finance minister will meet with media people and hope media people will know what they are talking about. And they will ask questions about budget implementation. We have talked also about the level of capital project, capital spending implementation. Our view is that it should not be 5% as we hear for 2025. We should be talking about something like 95, 100% because of its catalytic impact on Nigerians. We've talked about a better timing of borrowing and a good mix of foreign and local borrowing. I'm sorry, you are hearing me say that we should time our borrowing better. And I'm not saying that we should forget borrowing. The truth is that we cannot afford to do that. Nigeria will borrow next year, I can swear. So it's better for us to borrow better. We said borrowing should be project tied. Government should not just be borrowing for any reason. Borrowing tied to project means that at least the projects will be able to generate the resources to pay back, so that our revenue to debt ratios are better. But most importantly, we are not putting an impossible obligation on the generations yet unborn. And I think there was just one more thing we used to define as success next year. But that's as much as we can do today. This has been Business Week, and I hope you have enjoyed our offering today. We'll be here again on Monday with a fresh edition of Business Week. But before we go, let me thank Lolade and, of course, Dr. Adeosun, who have joined me here in the studios. See you next week.